Hey guys, welcome to the Avoiding Broke podcast with me, Leanne.
And me, Jermaine.
So today we wanted to talk to you about property investing and more specifically kind of the key criteria that you'd be thinking about when investing in property.
I think this is really important because we know that there's a lot of investors who are still in the market now, more that will probably enter early next year, depending where the economy goes. And so to have a plan, to have a bit of foresight on what you want to do is really important.
Yeah, I agree. If you're going to invest the money, you don't just want to chuck it out there and hope it works. You want to have a plan. Do as much research as you can in the beginning. So what would you be thinking about then, Jermaine, in terms of your most key criteria?
So look, most key for me, right, at the minute is to get a bit of a sense of where you think the macroeconomy is really going. I think for me, crucially, it's actually around unemployment rates. Because one of the biggest things when you're investing in any type of property is to make sure clearly that the rent you're going to be receiving and you're going to be relying upon can actually get paid. And whereas this wouldn't usually be like my top criteria, I think right now there is so much variance in what's happening with workforces, in what's going to be happening with big businesses, whether or not they can actually remain financially viable, that I'm actually looking really closely at economic indicators, because I'm thinking if there's a lot of furloughs or a lot of businesses going under, people can't pay rent.
No, and it's such a key point, and you have to kind of adapt with what's going on in the macroeconomy, like you've been saying, what you're looking at. And ultimately, people who pay the rent, that's the money that you're getting back from your investment. That's your cash flow every month. So
100%.
You need to make sure that you're thinking about that.
100%. You know, guys, there's a really important relationship between the macroeconomy and stuff that we don't always look at and our success as investors. You know, because when you look at unemployment rates, again, it's a good soft indicator of your ability to get predictable, reliable rental income.
Yes.
You know, when you look at interest rates, it's a very good indicator of how much margin you're going to make, because the lower the interest rate is the less you're paying on your debt.
Yes.
Is the more profit you make. So there are very, very simple relationships between key economic indicators and your success as a landlord. So for me, I'm in the macro right now.
Yeah, I think it makes complete sense getting in the macro, and also that we were talking about employment rates here, but they vary across the country as well. So you can't just look at the country as a whole. If you're investing in a particular area,
Yes.
And therefore you need to understand what's going on in that area.
Definitely. And you know, Papa, I think location then, guys, right, is really important. I know Leanne's very big on location at all times. Whoever we talk about our decisions, where's the location? All right. Location's important, guys, for different reasons, right? So when we look at this is kind of our methodology. When we look at location, we are looking at kind of big established businesses. We're thinking very carefully about that. We are looking at the companies that we think are going to be successful in the future.
Yes.
And we're asking ourselves the question, what locations are they found in? Because where they are the areas that they may be looking to grow in. So to give you an example, you know, if Amazon are going to do really well in the future, you know, right now we've got research that shows us where Amazon distribution centres are located. And so we think those locations are where they could be investing. So that's a really great factor there.
Yeah, no, I think that's key. I think it's looking forward, like you've been talking about where there's a potential to grow. But also they're going to be those key staple businesses that are always going to be there. And actually this COVID time has shown us what those are.
For example?
Where you've got your hospitals.
Yes.
Hospitals are always going to be there. And your like grocery deliveries, your grocery distribution centres, your big supermarkets, that kind of things, they're always going to be there. And that's shown through this time, even when other businesses have closed, those have had to keep going.
Yes.
So for me, it's that look to the future, but also don't forget your staples.
Definitely. Definitely. Look, I think that's a really solid point for any investor to really be mindful of right now, is you make your decisions as much on what is predictable and what you think is always going to be there. Because, you know, when you choose to invest in property, you invest in land, you are investing in something that you believe will always exist.
Yes.
Like, you know, long before all of us come and go, the land beneath us will always be there. So if you can then match up that thinking with other services or other businesses, for example, food and healthcare, all of a sudden you're building a really solid picture of like good long-term prospects. I'm with you. I mean, obviously, I'm with you. We do this stuff together, right?
We do it together.
But I think that's when you look at location. I think that's very, very solid thinking.
Yeah, and then you have to marry up the two as well, don't you? Because you've got your location, but then you also want to look at what the rental market's like in that location.
True.
The kind of rental income that you may expect, and does that fit with the kind of house prices?
That's true, actually. Really good point. So I think it was maybe like last week or this week. I think there's a Zoopla report on this Q3 state of the housing market, and I'm pretty sure that report shows you like average rents across the country. It will show you average property prices.
Yes.
And you'll be able to get a sense, just comparing it with employment rates. You'll be able to get a reasonable sense of like how big rental markets are, how robust the people in those markets are in terms of their employability, and you get a sense of basically what a property could cost and what rent you could expect from it, right? Which will help you do some rough calculations on the kind of returns you can be expecting.
Yeah, I think you've hit on the three key things there: property prices, rental income, and employment rates and business.
Yeah, I think employment rates and business you could probably look at in the macro context we spoke about before, but certainly when you look at like kind of average rental incomes combined with typical property prices, that will give you a very, very good sense of how far your money's going to go and what kind of yields you're going to be generating.
Most definitely. And like you mentioned, I think it was a really good point, the reports that are out there.
Yeah.
So you can get those reports and you can track them over time. So even if you don't feel like you're in a position at the minute to actually go out and buy something, but you want to, then be tracking those. It'll give you a good idea about areas and the rental income in those areas and property prices and what's happening to them over time.
That's a great point. So guys, if you were to just literally go on Zoopla and Rightmove, you want to understand the UK, don't just look for look in the sections where they've got their different publications, and you'll see very clearly they do regular reports on the state of the housing market. Nationwide also do an excellent report.
Yeah, they do.
So just jump on there and sign yourself up. The stuff comes through to your inbox every month or whatever it may be, or every quarter, and you can just go from there. There's one other big point actually that you were talking about, Leanne, which is around property price over time, because I think as much as you want to understand your current average prices and your average rental yield, you also want to know how much those markets grow.
Yes.
That's very important, because one thing that, Leandra was telling me, and, we'll share with you, is looking at capital appreciation alongside your cash flow is very important for the savvy investor, in my opinion.
I do. I think you need a good balance between the two. You obviously want your cash flow coming in every month.
Yeah.
But I think if you're thinking long term, then looking at where house prices may be moving to, like you can't really predict these things, but having an eye on, where prices may move to. And for me, I guess you just don't want anywhere where house prices aren't growing.
Yeah,
completely.
completely.
You don't want anywhere house prices are flat, because ultimately capital appreciation can be a big boost in being able to get more properties.
100%. Well, look, capital appreciation is, what you've just said is spot on. That is the number one factor in allowing you to get more properties. I mean, guys, think about it, right? How many people have you seen before? And particularly in London, oh my gosh, some of the older generation in London, how many people have you seen? They buy a house for 200 grand. A few years down the line, that house is worth 400. They have somehow managed to earn, let's just say, for example, in 3 or 4 years, they've earned £200,000. That far outstrips what they probably would have earned in their jobs.
Yes.
And that money allows them to go and buy even more property. In London, I know several property millionaires who in 3, 4, 5 years have over £1 million worth of equity in property they've purchased. And they definitely would not have earned that money in their jobs.
No.
So, and that's kind of the incredible power of property, because it just accelerates everything. And that's why capital growth is important.
Yes.
But one of the key things that you've always got to remember, guys, and this is where Leanne always talks about the balance, is the thing that lets you get to that big capital growth point is your cash flow. Yeah. So you can't trade one for the other. You can't look and say, I think I'm going to make 200 grand in a few years, so I don't need to worry about the cash flow. It's not like that. You've got to keep your eye on the cash flow. The cash flow is what keeps you in the game. The capital growth is what accelerates you through the game.
Yeah, that's a brilliant way of putting it. I love that.
Actually. It is great, isn't it?
Yeah, it is great. So I think actually that's a really nice place to leave it there, because I think we've covered definitely the key points that we talk about and the key points that are hopefully helpful. And so, I think you summarised things beautifully at the end there.
Awesome. All right, guys. Well, can I do a quick summary again, just to make sure I remember this stuff. So guys, we think a lot. We think a lot in the macro. Definitely jump in, by the way, because I'll definitely forget something in the middle.
I will.
We definitely think a lot in the macro, right? So look at employment rates. Think about where your macroeconomy is really moving, because that's what helps give you that predictability and not predictability, but more comfort about people's ability to pay rent.
Yes, and remember that it may vary across the country. So
100%.
Look at different areas.
Exactly. So you need to have your really close eye on location. So you need to understand how the different locations, what kind of economic challenges they're experiencing. Understand big businesses in those different locations, because that gives you a really good sense of the potential of that market to do well, or at least to be resilient. And the last point is then there's this really funny balance between capital growth and cash flow. And just remember that cash flow is what keeps you in the game. The capital growth is what accelerates you through the game. And so the more you can keep an eye on those two things, invest in areas that ideally offer you both, I think is the more you're gonna thrive in this industry. Huh?
Oh, I completely agree with that. Look for the balance and try and get both.
Perfect. So guys, look, as ever, we've loved being with you. If you have any comments, questions or queries, please leave them below, or hit us up everywhere on all social media at Avoiding Broke. All the links are below. Other than that, I think it's a case of we'll see you next week. And guys, if you do want to follow up on anything that we've mentioned, just drop us a line. We'll be happy to help.
Definitely.
All right.
We'll speak to you next week.
Take care, guys.
Bye, guys.
Bye-bye.
Bye.